All right, today we're cracking open the financial story of an absolute giant in the Indian economy, Reliance Industries. We're going to look at everything, the jaw-dropping growth, some of the red flags you need to know about, it's all in the data. So let's just jump right in.
Okay, first things first. Just look at this number. We're talking over 18 lakh crores. That's the market cap of Reliance. I mean, it's one of those figures that's so massive it almost doesn't feel real, right? This really sets the scene for the behemoth we're going to unpack today.
So, here's how we're going to break it all down. First, we'll meet the company itself. Then, a quick financial health check. We'll look at a decade of growth, touch on some cautionary notes, and wrap up by seeing who actually owns this thing. Simple as that.
Okay, Section 1. Meet the behemoth. Let's start with where it all came from the founder to the conglomerate it is today.
So, the story starts with the legendary Dhirubhai Ambani, and today it's led by his son, Mukesh Ambani. But here's the key thing you got to remember. The Ambani family isn't just managing this company from a distance. Nope, they own about half of it. That's right, 50%. So when you talk about who's steering the ship, it's them. And they have a massive, massive say in where it's going.
All right, time for our financial health check. We're going to dig into the key numbers and really understand what's going on under the hood.
First up, we've got something called Return on Capital Employed, or ROCE. For Reliance, that's sitting at 9.69%. Now you might be thinking, okay, what on earth does that actually mean? Well, let's get into it.
So ROCE is basically a report card on how smart a company is with its money, all its money, both from investors and from loans. For every 100 rupees Reliance puts to work in its business, it's making a profit of about 9.69 rupees before taxes and interest. It's a really clean way to see just how efficient the whole operation is.
Next up is a similar sounding but different metric, Return on Equity, or ROE, and that's at 8.40%. This one gets a little more specific. It's all about the shareholders' money.
Yeah, this really is the ultimate scorecard for shareholders. If you invested your money in Reliance, this number tells you how well they're using your cash to make more cash. And right now, for every 100 rupees of shareholder funds, the company is churning out 8.40 rupees in profit. It's a direct measure of how much bang you're getting for your buck as an owner.
Okay, moving on to our third section, a decade of growth. This is where things get, well, pretty wild. Let's go back 10 years, from 2014 to today, and see the journey.
And wow, just look at this sales growth. Back in 2014, we're talking about sales of around 433,000 crores. Pretty big, right? But flash forward to today, and that number has exploded past 1 million crores. It's more than doubled. That's just an insane level of expansion.
But you know, big sales are one thing. What about actual profit? Well, if you thought the sales growth was impressive, check this out. Net profit went from about 22,000 crores in 2014 all the way up to almost 98,000 crores today. That's not double. That's more than 4 times bigger. So Reliance hasn't just been growing, it's been getting way, way more profitable.
So, what does all this mean for someone who actually owns the stock? Well, if you look at the last 10 years, the stock price has grown at an average of 19% per year. That's fantastic. But if you zoom in a bit, you see a different picture. Over the last 5 years, that growth slowed to 9%, and in just the last year, it was down to 5%. It kind of suggests that the rocket ship might be leveling out a bit.
Okay, now for a reality check. You can't just look at the good stuff, right? We have to look at the other side too. So in this section, we'll cover the cautionary notes. And it's super important to know, these points are machine-generated, straight from the source data. This is an objective, data-first perspective.
So here are the 3 big things the automated analysis picked up on. First, it flags that 10% sales growth over the past 5 years as being, well, a bit poor. Second, it points out that low return on equity, remember that shareholder scorecard, has been averaging under 9% for 3 years. And third, the dividend payout has been pretty low, meaning the company keeps most of its profits instead of giving it back to shareholders.
And just to really drive the point home, here's the disclaimer right from the source. It basically says, hey, this is a computer-generated analysis. It's a great starting point, but you absolutely have to be careful and do your own research. Don't take it as the final word.
Okay, so who exactly is holding all these shares? Let's get into our last section, who owns Reliance? It's time to look at the shareholding pattern.
This chart lays it all out pretty clearly. First, you've got the promoters. That's the Ambani family, with a solid 50% stake. Then, you see DIIs, which stands for Domestic Institutional Investors. Think Indian mutual funds, insurance companies. They hold about 20%. Right behind them are the FIIs, the foreign institutional investors, with around 19%. And then there's the public. That's folks like you and me, owning about 10%.
But here's where it gets really interesting. There's a story unfolding here. Look at the foreign investors, the FIIs. Their stake has actually dropped quite a bit since 2021. But at the same time, look at the domestic investors, the DIIs. Their share has been climbing steadily. So, it looks like as foreign money has been pulling back a little, Indian institutions have been stepping right in, which is a pretty strong vote of confidence from the home team.
So that leaves us with the big question, doesn't it? On one hand, you have this mind-blowing growth, this incredible scale. On the other, you have these little cautionary flags about efficiency and shareholder returns popping up. So the real puzzle for the next 10 years is, how does Reliance manage both? How do they keep getting bigger and bigger while also getting smarter and more profitable? I guess that's the multi-trillion rupee question we'll all be watching.